Hey, welcome back, everyone. It is time for another red hot covered call video. Well, hey, look, today we're talking about the cash secure put. And the reason I wanted to talk about it is because I'm thinking about rolling a recent cash secure put I did on Rocket Mortgage. Now, I haven't done this yet. And the reason I'm doing this video is because there's so many YouTubers out there creating videos about the wheel, including myself, where over the past month, I've done multiple videos on the options wheel strategy. Well, what I love to do for my channel and all my subscribers is up your game. Now, it's one thing to watch a video and learn a new investment strategy and how easy it is. But once you get into the trade, what does that YouTuber give you to up your game? Like what I'm about to show you today. Okay, it's one thing to talk about a strategy and maybe even give you some loose numbers about how much I've made or they've made, but how about give me a little bit more? Give me a little meat on the bone. So that's what I'm going to do today. I'm going to show you a trade. We're going to talk about it. So maybe you learn something and up your game. And we're going to talk the cash secure put today. So it's very important to have your exit strategy. I mean, there are books written on the selling premium exit strategy game. And a lot of times people don't talk about it because it's boring, right? It's boring to talk about these things. But look, if you don't have those tools in your toolkits, man, you are setting yourself up for failure. Now, for the past 4 years, I've been doing my channel talking about these little things we can do to up our game and to reduce risk and also help us with our exit strategies. So today, the exit strategy we're talking about is rolling a cash secure put down and maybe making some more premium. And we're going to talk about why we do that, right? It's very important to not only talk about it, but what's the mindset? What's my mindset so you can feel a little bit closer to it, because I know you're out there experience the same thing I am. So let's go ahead and get to this. If you like anything you're hearing today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And hey, look, I think this is a video you might want to share. And I would love it if you share this video today. And, you know, it really does jack me up when you guys come out, you support the channel, watch the videos, and hit the like button. That's that opportunity for you to tell me you like what I'm doing. So let's go ahead and get to this. We're going to talk about my Rocket Mortgage recent cash secure put where I started a wheel. In fact, I did a video on this. If you go back to my channel, you'll see it right there, Rocket Mortgage. And I talked about why I did the trade. And I'm not going to go too deep into that here, but we'll go in the Wayback Machine and sort of set this up just so you understand where we're at. And if you remember, Rocket Mortgage came from IPO just hitting on all cylinders, right? I think it went public at 19, rallied, peeled back, and then it just went to the moon to about $30, $33. Well, the housing market is red hot, and all of the online financial services company like Redfin, Zillow, Rocket Mortgage, they're all flying because the Fed is keeping interest rates low for some 2 years, right? They're going to keep rates low for some 2 years. So for all those folks that want to go out and buy a home or refinance, this is their moment. And see, when you refinance, you're adding to the bottom line of your personal finances, right? If you have a higher interest rate, you refinance lower, that money you save goes straight to the bottom line. That might be the difference between you keeping your house and making the ends meet. Now, I felt really good when Rocket Mortgage actually fell. Yes, they announced earnings. The stock had tumbled some 15%. And with the stock falling, I use that as a great opportunity to sell that cash secure put. And if you remember, I believe I did a 25 cash secure put. The stock had fallen tremendously, and they paid me $3.31. I was so jacked, I decided to do a video, right? I wanted to do a video for you folks and let you see what I'm doing. because Rocket Mortgage trading near $27, $26, it's a great company, and it fits well with a lot of smaller accounts, right? You got to have 100 shares. Well, fast forward, I have an October 16th. Okay, this isn't just a short window, 1 week cash secure put like I did on Redfin just this week. I actually did a 30-day trade, so I can sit, right? I have patience. What I always tell everybody is that the selling premium game, if anything, gives you built-in patience. You see your stocks go up and down, up and down. That's one of the biggest downfalls of being a swing trader, right? You don't have patience. You buy that stock, you're looking for that little percentage gain, man, it goes down, you don't have patience, you pull the trigger, you sell, you lose. But when you sell premium, you're somewhat obligated. I know we can buy back our options, but you're somewhat obligated to hold that position, whether it's your shares or the cash. So I have patience, and I have an October 16th, and that's 30 days away, okay? So I could wait. This really isn't something I have to deal with right now, but I'm thinking about it because I'm thinking I could buy back this cash secure put, the one you see right in front of you. I could buy this back, and I could actually pick a lower strike and collect premium for maybe, let's say, a 1 week further out option. Now I'm going to show you the options chain of what I could make. And again, if I didn't preface this already, I haven't done this trade, but I'm thinking about it. And again, the reason I'm doing the video is because many of us find ourselves in a situation where the stock was trading higher. We wrote that cash secure put a little bit lower, feeling really good, and the stock just breaks through that line. And now we're starting to sweat it, right? Now we're starting to think, damn, man, I could be assigned these shares. I don't really know if I wanted to be assigned the shares. It was a great idea then, might not be a great idea now. Okay, so this is what I could do. Step number one, we can wait. We can wait. Rocket Mortgage seems to have support. Look at the market right here. I don't know if you can see it. The Dow's down 200 points. NASDAQ's down 200 points. Rocket Mortgage has found support around 21x. I feel good with that. And this might be a great opportunity to build a line of support. You see that right there? It has fallen. All the sellers are out, and it's bouncing off of this 22x. It actually might go higher. Now, I don't know that. I'm currently down on this position, so I have to lay out all my options, no pun intended. So step one is I literally wait. I sit on my hands and wait. They pocket me the 331. It's the 25 strike. Right now, if you subtract $25 and 331, my true cost basis is not in a bad position. In fact, I think it's a 21x, meaning if I'm given the shares or assign the shares at 25, I take my $3.31 and apply it to the $25 strike. That's my true cost basis. So right now I'm still in a good, favorable position. So I could sit and wait. Obviously, if this thing falls down below 20, now I'm starting to sweat it. And remember, I did 1,500 shares here, so we're talking real money. Now, with that said, I could buy this back, right? I could actually buy this option back. The option I got paid $3.31. I can buy it back. Now, because it's under the 25 strike, we have to understand options have two elements to its pricing. You need to know this. It's real money, which they call intrinsic value, and time value. When I was paid $3.31, this was above the 25 strike. I had zero real money and $3.31 of time value. Well, now that the stock is down, and just to keep the numbers straight, let's just say it's $23, okay? Let's just say 23. Well, now this option price would have at least $2 in real money, right? It would have $2 of real money plus the time value. I have to understand that. So with that said, if I buy this back, boy, I'll tell you what, the very next option I write, the rolling down for another credit part of this, I better understand the numbers. Okay, so let's go ahead and look at this options chain, because these are really my two options, right? I mean, we don't really need to go any further. I mean, outside of just buying it back, losing money on the option, and sitting on our hands, but I really don't want to do that. I don't have to do that. One, we could be patient, let this play out. Two, we can buy this current option back for more, and then I roll down and write a cash secure put lower and make more credit. Let's go ahead and look at the options chain and see what we can get. Now, here's the puts for this October 16th strike. Okay, so you remember this is where I'm at right here. Okay, so remember that I got 331 for this. So right now as it stands, if I want to take the obligation off the board, right, me being obligated to buy somebody's shares at 25, I would pay approximately $3.51, meaning I got paid $3.31, I pay $3.51. That is a debit in my account of 20 cents per share, and I have 1,500 shares, so we're talking real money, right? That's going to be a negative in my account. Okay, that is a true loss. Now, with that said, let's think about rolling this cash secure put lower and seeing what premium we can make on the other side. Okay, so I hope you get that concept. The obligation right now is for me to buy 1,500 shares from somebody for $25. For that obligation, they paid me $3.31. Right now, because the stock has fallen, right, and it's below 25, meaning the likelihood of this finishing below 25 is great. The option still has a lot of premium in it, and I would in fact buy it back for more. Okay, so with that said, I'm losing 20 cents if I do this right now. Let's go to the next options chain and see what I can get if I were to buy this back, lose money, but then roll the next cash secure put at the current at the money strike, which I would probably do. So I picked the October 23rd strike. I didn't pick the October 16th. Because I put this trade on about a week ago, I'm going to go ahead and add a week to my current expiration. So looking at the October 23rd, let's see if I can roll down and what kind of credit I could get. So remembering from our last situation, I'm down 20 cents on this trade. Looking at the October 23rd, meaning I pushed out an entire week. If we look at the current, basically at the money, okay, 23 at the money, I'm rolling down. Remember, the original was 25. Now I'm rolling down to 23, right? Because the likelihood of it trading at 23 30 days from now is unlikely. With that said, right now they will pay me $2.12. So the question becomes, and really this is the core of it, okay, minus out the 20 cents. So basically I'm going to get paid, this is very rough, I'm going to get paid $1.92 because we have to deduct the 20 cents over there with the new $2.12, and that's what I'm going to make for the next 30 days, putting up all of the money to buy somebody's shares at 23. So I have to make that decision. And that's real money in the wallet, right? I have paid for the bad decision back here, right? I have paid for the bad decision back here with that 20 cents that I mentioned here, okay? That obligation's gone. I paid for it with this 20 cents. Now I have a new opportunity. This is where options give us the control. If we do not get executed on, we have control of this situation, okay? I can buy this, a current option back. I can now sell this option and make money. And I'll tell you what, if I truly believe this support line right here is going to be the new support, now do the math, right? I'm going to be assigned somebody's shares potentially at 23. If 22 is the support, I'll tell you, I have a great opportunity to take somebody's shares, write cover calls on it, out of the money, cover calls, because it is likely, and of course, this is all pie in the sky, but it is likely that if this is support right here, Wall Street might move it higher, okay, once those sellers have truly come out since last earnings. Okay, so I'm going to go ahead and let you, chew on that a little bit. Let me give a really quick recap here. When the stock was trading around 26, 27, and the stock was tremendously down, when I did that cash secure put at 25, I'll tell you what, it was all rainbows and bubblegum, right? Life was good. I felt like it fell from 33 to 25. I'll never be assigned. I pocket $3.31 a share. We move on. Well, now the stock continued to fall. And now, because we always manage our trades, right? We never set it and forget it. I have to make a decision. Now, what's that decision going to be? Remember, I can sit on my hands, man. I have another 30 days. And if I think Rocket Mortgage is basing here at 22x, then I can just wait, or I can take action. And if I'm going to manage this trade, I need to have a plan, because remember, I buy back the option right now as it stands, I'm going to lose money. I'm going to pay more money than I got paid. Well, that plan might be to roll down, go from the 25 strike to the 23 strike, and get paid that $2.21. We then deduct the 20 cents for which I lost, and that is our true profit. And, again, it just goes back to having control with our trading if you don't get executed on. And that's the key here, because remember, any time you enter a selling premium trade, you can be executed on. I'll tell you, that happens more frequently than you think. Hey, look, I'm going to leave it right there. I hope I upped your game. And of course, if I do this, I'm going to do a video on it. And I'll make sure I'll reference this one. Look, what I want you to do is, if you like this video today, I want you to subscribe to the channel. I do it all the time, trying to up your game. Do me a favor, when you watch those other YouTubers do videos on such topics as the options wheel strategy, and they show you how much money they're making, ask them in the comments below to up your game by them doing a video just like I did today. Hey, look, at the end of the day, I want everybody to have success. And that would truly up the game. Hey, look, if you like this video today, bang that like button. And if any of that interests you and you want to be a part of my premium membership, for which I do this all the time, you've seen my videos where I talk about the content I provide, the stock commentary I provide, the ideas I provide, and I provide the upgraded CTB dashboard, which is the #1 covered call research dashboard on the planet. Go over to ctbdashboard.com, click Upgraded Dashboard. Your 1 free month offer is waiting for you. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.